Right, everyone. It's my great pleasure to be back at Noosa. Congratulations to the organisers and the sponsors of this event. It's fantastic to be here. It was fun last night watching the Blues beat the Reds. Never used to happen when I was a Waratah, so it's nice that the world's changing. And great to be here, particularly to tell the Fenix story. As introduced, we are a mining and a logistics and a port services business in Western Australia. We've had a lot of success with the Iron Ridge mine. You can see it there. What a great photograph. One of our quad road trains, product stockpile, crushing and screening plant, and the mine. Let's get into the story because it's evolving and it's a big growth story. Very pleased to meet some happy shareholders at the booth here at Noosa. And we're starting what is going to be a very strong re-rate around the growth potential and the infrastructure and ability we have to monetise our position in the Midwest in terms of commodities, moving them and bringing them to market. So it's nice to see the share price moving, although we've still got a very modest market cap, under $300 million. A lot of that supported by our cash. And we're all shareholders amongst the board, and so we're keen for people who are listening to join us. There are three pillars in our business. Number one, we started with the Iron Ridge deposit. It's one of the highest grade iron ore deposits on mainland Australia. I separate out the mainland because I know Peter Kerr did a good job this morning talking about Mount Gibson's very high-grade Koolan Island deposit. It is a kilometre offshore, so that gives us the title, I think, at Iron Ridge. But the key really to Fenix is actually the other two pillars. We have a wholly owned logistics business. It's centred around the new haul trucking and logistics functions, and it's fundamentally reinvented the cost structure of Fenix's operations. And we own a port services business. We have on-wharf storage at Geraldton Port that gives us unparalleled access to markets. And here's the picture putting that together. We're in the Midwest, so this is relatively close to the capital of Western Australia, Perth. 4 or 5 hours drive to the north gets you to Geraldton, and that's where we have our port services business, on-wharf storage at Geraldton Port. And we also have the New Haul Logistics Depot and the New Haul Logistics Training Centre and Driver Welfare Centre, where we're taking locals and training them how to be part of our company as we expand our workforce. Moving inland on that Geraldton Mount Magnet Road, 100 k's or so you get to the town of Mullewa, and just outside that is the Riverdini rail siding. And that's on the way on gazetted public roads, 500 kilometres from Geraldton you get to the Iron Ridge iron ore mine, and the various other assets there we've put together. Really three fundamental transactions have built the company as you see it today. Obviously the development of the Iron Ridge project. We started, as many small companies here are, based on a geological resource and the opportunity to develop it. If you go back to 2019, when Fenix published a feasibility study, the company outlined that we thought we could produce iron ore at Iron Ridge and get it to Geraldton and export it for $85 FOB Geraldton, Australian. And that was roughly $25 mining, crushing and screening, roughly $50 in haulage and $10 at the port. I'm very proud that we're currently, as of our March quarter, our C1 cash costs were $76. So unusually 5 years later, we've not only performed to the feasibility study numbers, we've actually beaten them. And we've done that across the board in the face of double-digit cost inflation in Western Australia, and particularly in the iron ore mining industry. And we've really done that around our haulage ability. $50 is a convenient number in a feasibility study that relates to 10 cents per tonne kilometre over that 500 kilometre journey. And we're doing that for significantly less than 6 cents a tonne kilometre. It is a complete game changer, and it's very exciting what that capacity does to unlock other deposits in the Midwest. And that's exactly what we're doing as we bridge from Iron Ridge. We've recently announced that we're going to start mining the Shine iron ore mine. We acquired that as part of the assets from Mount Gibson. and we're working on a feasibility study for Beebyn W11, which represents a third mining opportunity. But let me take you to Iron Ridge and show you a little bit about our haulage and port operations. You can see a beautiful ore body running down the middle of what is a very simple mining operation, a 3-to-1 strip ratio. It's a very consistent producer of 100 to 120,000 tonnes of ore per month. Macca Mining are our mining contractor here. They've done a very good job since inception. They also run the crushing and screening plant. You can see we've outperformed on the lump expectation. We're currently running at about 40% lump and 60% fines. And the 65% ore body equates to a 64% lump product and a 63% fines product. So we get a significant premium to the 62% index price that you would see on the news. Very simple operation, very well run by the team at Iron Ridge, and you can see those product stockpiles there. We then load those onto our 100% owned haulage fleet. Very simple weighbridge system. Very proud of our clean, new, well-operated trucks. There's a lot of technology that goes into this business, and that drives fundamentally fantastic cost outcomes. We own the only side-tipping truck unloader at the Port of Geraldton. Very efficiently unloads those trucks, 140-tonne payload, into our sheds. And we have 3 sheds at Geraldton Port that have a combined storage capacity of more than 400,000 tonnes. That allows us to very efficiently load the Panamax-sized bulk carrier vessels you can see here at Geraldton Port to access our global customers. And we've been very successful in doing that. In FY21, the first year that we were in production, we had a net profit after tax of $49 million. In FY22, we followed that up with a $51 million profit number. Last year we made 30, and we're on track for a better number than last year this year. So we've been very profitable in building what is an exceptional return on invested capital. The feasibility study I mentioned outlined that we could build Iron Ridge for $15 million, and that's exactly what we did. Since then, we've paid back $65 million in dividends, and at the end of March, we had just under 90 million Australian dollars in cash. And so that's the back of what has been a fantastic development of Iron Ridge, and I'm very excited about what we do next. Iron Ridge, we're more than halfway through that ore body. We've got about 3 years to go. It's very consistent. We've actually just started a drilling program there. The ore body is constrained by various heritage agreements. We mine in a very close partnership with the Wadjur people. But we do think there's some interesting exploration opportunities, and so stay tuned for any indication we can add a bit of mine life at Iron Ridge. It's obviously a wonderful ore body, and we're doing a great job of mining it. We acquired Shine as part of the port infrastructure and rail siding assets we acquired from Mount Gibson. Mount Gibson are the most successful miner in the Midwest. They mined 50 million tonnes of iron ore, and they built a significant amount of infrastructure at the port, access to rail, and they invested in the exploration and development of the Shine iron ore mine. As you can see from this recent photograph, it is genuinely shovel ready. The recent announcement we put out demonstrates that with $7.5 million capital, we can bring this into production in the current year at a C1 cash cost of less than $70 Australian FOB Geraldton. We're going to mine this in stage 1 at about 100,000 tonnes a month, so roughly 1.2 million tonnes per annum, and we're going to mine it at a 60% grade. So that's exciting. It'll be our second operation, represents the opportunity in calendar FY25 to double the tonnes and double our numbers from Iron Ridge. Beebyn W11, this is a project that forms part of the Sinosteel portfolio in the Midwest. Sinosteel invested more than $1 billion in exploration and development more than 10 years ago. They control more than 300 million tonnes of DSO hematite in the World Range, which is where we're currently mining. The Beebyn W11 deposit is a 20 million tonne deposit that's 20 kilometres away from Iron Ridge, and we negotiated a right to mine 10 million tonnes of this deposit, and we'll be doing that starting early next year. We've set a timeline of completing all the approvals we require during the current calendar year, and we're in the closing stages of completing a feasibility study to be able to update the market on what our initial expectations were, that that's going to be roughly $25 million to produce a similar mine with similar outcomes to Iron Ridge. You can see here that at the moment it represents a great opportunity. It's exactly the same as what we did at Iron Ridge. When we started at Iron Ridge, the photograph there 4 years ago looked exactly the same. And so this will be our third mine in the Midwest, and the commissioning of this mine will get us close to 4 million tonnes a year. That's an exciting number. If you look at the margin we're making at Iron Ridge and you extrapolate that, we'll be a much bigger company in terms of revenue, cash flow and profitability. The backbone of our ability to do that is our logistics fleet. It's a very exciting business. I mentioned in the introduction that we've reinvented the haulage and logistics costs in the Midwest. It allows us to look differently at the monetisation of deposits that have previously either been ignored or been waiting for the development of significant bulk haulage infrastructure. Sinosteel not only had their World Range projects, but the very large magnetite projects. Their investment was really underpinned by a parallel investment in developing the Oakajee rail network and the new proposed port north of Geraldton at Oakajee. And that's really the story of the Midwest. Lots of people have invested in exploration and development of bulk commodity, and particularly iron ore development in the region, and particularly magnetite development. But the scale of those projects have always been considered that they needed access to railway and access to a new high-volume bulk commodity port, similar to what you see at Port Hedland. Fenix's business model is built on the fact that we don't need a railway. We are achieving costs on our road haulage fleet that are lower than the comparable costs on the Midwest rail network. I'll just say that again because it takes people, and particularly government officials, a while to understand that. Our costs on road, on public gazetted roads using our quad road trains, is currently less than the comparable cost if we were using the Midwest rail network. And that means we can unlock value. Equally, the state government are investing more than $300 million in the Port of Geraldton. That's going to have a number of benefits for all users of the port. There's a lot of grain. Carrara are doing 8 million tonnes a year of magnetite. We're convinced we have the capacity with our existing facilities at Geraldton to do 10 million tonnes a year of export. We currently have reserved capacity of 4 million tonnes. Stay tuned for our June quarterly. We got very close to 4 million tonnes a year run rate in the March quarterly, if you include our own tonnes and our third-party logistics tonnes. And we're looking to expand on that reserved capacity. And our business in the Midwest is predicated on the view that we can do 10 million tonnes. We don't need a railway and we don't need the government or anyone else to build us a new port. That ability to haul long distances on road very cheaply deserves a separate half-an-hour presentation. It's not one answer, it's a lot of answers, but it's intrinsically linked to Craig Mitchell's lifelong involvement in the logistics industry and the logistics in the Midwest. We're building a different kind of business. We've also invested $10 million, and we're completing this as we speak, in developing an inland port at the Riverdini rail siding I mentioned. This is a photograph from last week. This is a radial stacker. This moves our collection point for iron ore in the Midwest 100 kilometres inland. It gives us access potentially to the rail network when our volumes require it. There is a limit to what we can put on road. We're not close to that yet. The investment in this gives you an indication of how confident we are that we are going to get close to that 10 million tonne a year number. That's why we're building infrastructure like this that's going to unlock the Midwest. The Port of Geraldton, I mentioned it, it's great. Here are our sheds. You can see the infrastructure that connects them to the Midwest Port Authority rail unloader. You can see the rail network there. That's what Peter Kerr and the Mount Gibson team used to do 50 million tonnes a year. We know it's capable of doing more than 5 or 6. And we've got a truck unloader on the bottom, reads into all those sheds. Quickly, in closing, we've got a strategy. Keep making money from Iron Ridge, extend the life of Iron Ridge, add Shine tonnes to that, add Beebyn W11 tonnes to that, and then build more tonnes. We're almost the opposite of other miners that usually stand on top of big resources and talk about how they're going to monetise them. we've got port infrastructure, we've got logistics infrastructure, and now we're going to work backwards and build an inventory that we can mine. We're looking for third-party deals. We've signed a $70 million third-party contract with Gold Valley. We have a $10 million port services contract with Kufi. And there are lots of opportunities in the Midwest for us to access our infrastructure, but the number one is to mine our own material. If you look at this graph, you can see how we're going to add the 1.3, 1.4 million tonnes we're mining from Iron Ridge to the 1.2 we're going to mine at Shine and Beebyn and other projects on our pathway to what's going to be a big company. This is the Midwest. These are projects currently doing feasibility studies. All of these projects need access to port. We want to help them. We can be a third-party logistics provider, or we can own and mine them. And stay tuned for more news on what that looks like. I've got a booth right on the entrance to the conference. Very happy to talk to anyone about our plans and look forward to more success from Fenix.